What's up, everyone? Appreciate you being here today. Today, I want to talk about the 4 ways to get wealthy. There's really only four, and I think people overcomplicate it. So I'm going to keep it real simple, give you the pros and cons of all four. And funny enough, I've done all four and still do several of them. So I give you a little bit of backstory about me and why I might have a little bit of experience in this. But first, if you do find value, I really appreciate if you like and subscribe. Truly helps the channel. uh, Keeps me motivated too. Wife stops making fun of me about doing these videos, but hopefully you find some value in this. So let's get started. The first one I'm going to talk about is actually one that people seem to hold in the highest regard. And number one is luck, right? It's the one that you see the most, lottery winners. I'm here in Vegas, so there's buildings built all over the place as proof. People think that luck is the way to get wealthy. So, playing the lottery, gambling, even inheritance, those are things you can't control. And as a result, you really shouldn't put much time and energy into focusing on those. They sensationalize a lottery winner, but you know a lottery winner? Not many of you do, right? Not one that keeps any major amount of wealth. And the other thing you notice about people who earn money or make their wealth through luck is it's very hard for those people to keep that money. And that's because they don't have the knowledge or the habits, to maintain wealth. So obviously not one you want to put much energy in. Number two, this one's going to be investing in stock market or index funds or mutual funds, right? Equity investments. This is a very tried and true way to gain wealth. Obviously, is for most people 401ks, IRAs, brokerage accounts. You invest in them over a long period of time, and you'll pretty much guarantee wealth. It's just numbers, right? The markets perform 10% or better, over long periods of time, very consistently. Obviously, it's not a smooth ride, but what people don't realize and what they miss out on is that for this to work, it's really just time. The longer you're invested, the better you're going to do. People get scared, the market goes down, people lose jobs, and then there's fear. And that fear of loss is what keeps people not investing in the stock market. But think of someone like Warren Buffett. Everyone thinks he's this great investor, and obviously he is, don't get me wrong, but he's not as great as people make him out to be. What he has is time. He's been investing since he's been like 11, 12 years old. The dude's in his 90s. He's had 80 years plus of investing. Now, if you know how to use a financial calculator, just put in $500 a month at 10% return over 80 years. I mean, you'd be surprised. It's probably $130 million. I just put that in perspective. In one lifetime, if you had been investing $500 a month, $130 million. Now, he has obviously reinvested. He's gotten other capital, and so he's been putting in more than 500 a month. But that's just what it is. It's just time. The longer you're investing, the better off you're going to be. And people get scared of investing in the market, and so they end up waiting until they're in their 40s, in their 50s, and by then you just don't have the same amount of time. So your returns aren't as good. And also, the challenge with this is that, think of like Dave Ramsey. He gives you the approach of, eat rice and beans, and then invest as much as you can. By the time you're 65 or whatever, you'll have, $1 million. You'll be able to retire comfortably. And while that's true, how much of your life have you missed out on? Not a lot of people want to eat rice and beans for 40 years. So for me, it is the easiest path to wealth because you're basically just using time. It is for sure the simplest way to get there, but it depends on what your goals are, which leads me to number three. Number three is real estate. Now, I also invest in real estate, and to back up, I invest in index funds, low-cost index funds that track the S&P 500, and I've been doing that for 15 years. And it's true; those returns are consistent. The market drops, I look for ways to put more money in when the market drops. It's just finding opportunities to buy when the market's down. But moving over to real estate, the benefit of real estate especially real estate bought with leverage, is that you can increase your returns. So where if I wanted to put, let's say if I have $100,000, I put it into index funds, all I can buy is $100,000 worth of index funds. So on a 10% return that year, I end up with 110,000. Nothing to laugh about. I mean, that's not a bad thing or anything, but that's what a 10% return is. Now, if I took that same $100,000 and I used debt and bought a $400,000 property or $500,000 property, and that property goes up 10%, that's $50,000, and that's $50,000 of money that I get, even on my $100,000 investment. So we're going to go through a tunnel right here. So wait till we get to the end of this. All right, so that's $50,000 on my $100,000 investment, which is a 50% rate of return, and it's because of leverage. Now, obviously, when you take on debt, you're taking on a little bit more risk, and so you have to know how to manage that risk to get a safer return, but you also can increase your returns, which, take away a different risk, right? The having to invest for as long. So there's good and bad on both sides. Now, my personal portfolio, I have 8 properties, and the thing about real estate when you use debt is that if you think about it, the market can only go 3 ways. It can go up, it can go down, or it can go sideways. With index funds, I need the market to go up. It can kind of go sideways if I'm getting some dividends. I'll make 1-2% on top of that, which means market can also drop about 1-2%, and I should stay about even. Now with real estate, the market goes up. Obviously, we love that. We make our returns. If the market stays even, because of the rents that I'm getting, I still make return on my money. So I'm still doing a 7, 8, 10% return, even though the market's staying flat. But on top of that, my debt's getting paid down each month. For our portfolio, we pay down about $3,500. I think it's getting close to $4,000 a month, no matter what. That's just from tenants paying me and me paying down the debt, which also means if the market drops 7, 8, 10%, I can still be even because of the rents, because of the equity that I'm building. So it works in all 3 markets. Now, if the market tanks, of course, we're all going to lose money. That's just part of life. You have to take that risk, and you have to accept that there's going to be risk no matter what direction you go. But the beautiful thing about the real estate side versus index funds is you have more control. Now, because of it's not liquid, right? So even though you have more control, you also have to realize you need to be able to hold on through the really difficult parts. So that means higher cash reserves, higher cash flow, right? The ability to lower rents and still make your payments and take care of your property. So there is more skill needed finding good deals, all things that you can do, but these are different choices. Which also then leads me to the 4th option, which I also do, and partly the reason I'm wearing this goofy hat. Owning a business. You can invest your money into a business. Now, this also obviously carries additional risk. Most businesses fail within 2 years. We all know that stat, but that doesn't mean all businesses fail. And what ends up happening is with investing into a business, you can return much faster, obviously depending on the business, and much greater. So for example, each year when I sit down and do my analysis of where we're going to put our money, I kind of take a look at the market. I see what opportunities are available, and I know I can put money in index funds and generally get about a 10-15% rate of return. Or obviously if the market tanks, I'm just going to hold on, look to buy more, but I don't have a lot of control over that. So then I look at my real estate opportunities. Can I find a property for a lower price than it's worth? Maybe it takes some fixing up. Maybe I can find a way to rent it for a higher price than others. But if I can find an opportunity like that, we'll put money there. Or there's the business side. Now for business, I I have a financial spreadsheet that I put together, business plan, that I'll calculate, right? If I want to put money into my business, where do I put it? Most of the time it's going to be into an employee or employees. If I can find really good employees, spend the money to train them, get them the right tools and resources to be productive. Obviously, all these things are costs. That will return a certain, usually within a couple of years, multiples on my money. So, these are things that you have to think about. Even right now with my business, I'm looking at a new office. All right, we came to the end of our lease, was a 6-year lease, and now I'm trying to decide. All right, am I going to move to a bigger office, which means higher costs, but I can also then expand more employees and grow the business more? Or do I stay in the place I'm at, which also means higher costs because the market's gone up. So I have to make those decisions. But it also means that I'm going to be capped out at the space that I'm at. And so I have to project over the next few years whether or not I'm going to be looking to grow as much in this side of things. So anyway, all of those things are ways to accumulate wealth. Each of them take a specialized skill and specialized work that you have to get good at and you can get good at. So that being said, you have to decide for you which one's going to be the best. And there really isn't a best, right? It's just what's best for you, where you are in your journey. So hopefully you found that helpful. Questions, comments, put them down below, and then we'll follow up. Hi, morning. Good. So appreciate you guys listening. One of the things I realized is I'm going to start talking a little bit about some of the other ways that we make money too, especially on the business side. A lot of people want to be entrepreneurs but are scared, which completely understandable. There's a terrifying portion of being an entrepreneur. Honestly, one of the things that helped me is that we were prepared. I had to live off of my wife's income for about 1 year to 2 years before I was able to bring home any income in my business. And then by year 3, we flip-flopped. She stopped working. I started making money. So you need to have that kind of a cushion in most cases for a business. Same thing with real estate. You need to have a W-2 job if you're going to be investing in real estate. You need to have yourself some sort of cushion to get through those difficult times, to build up your nest egg. Even with index funds, if you're putting all your money into investments, the market drops, it hurts, right? You got to be able to hang on through those things and keep investing and not get scared off. And then with luck, skip it. Just skip it. So, anyway, thanks for listening. Have a good one.